If you're new to investing, chances are you don't have a lot of money to start with. So in this video, I'm going to give you a step-by-step beginner's guide on how to start investing. There are many investment providers out there, but in this video I'm going to focus on Trading 212. The benefits of Trading 212 is that you can start with as little as £1. It's also very easy to start investing and can be very beginner friendly. Just before I start, this video is definitely not financial advice and your capital is always at risk when investing. So without further ado, I'm going to show you the Trading 212 desktop version. If you do want me to go through the mobile version, I can make a separate video on that. So once you've signed up for Trading 212 and you've completed the setup on the account, when you log in you are greeted by the portfolio screen. So in this screen you have a big number here, which in my case is £209.58, and this represents the value of your portfolio. So if you're new to investing, portfolio basically means the value of the investments you hold. So for me, my value is £209.55. However, I have invested £211.64. This is because currently my investments have returned me a negative 0.99% loss, which means a negative £2.09 loss. And this graph here allows me to track my gains and losses throughout a certain time period. For example, a day, week, month, 3 months, 1 year, and max. So if we go to this graph, this is the movement of my portfolio since beginning investing, which is around the 1st of September, so not too long ago, and it has just gone up. And the reason why it's gone up like this is because I have just deposited more money, not necessarily made a return on my investment. So if we go back to 1 week, we can see that it's pretty much flat. So if you're new to Trading 212, you might be wondering why there are 3 different accounts here. So the first is Trading 212 Invest. So if you're new to trading, this is the one I recommend. The next is Trading 212 CFD. And this is what I do not recommend as a beginner. Just don't touch it. This is advanced level stuff and it's much more risky than investing normally. The last is Trading 212 ISA. So if you didn't know, in the UK everyone has around £20,000 in which they can contribute to their stocks and shares ISA, and this allows all the gains to be tax free. If you want to learn more about ISAs, I made a video and you can check it out over here. So like I said, if you're new, just go for the Trading 212 Invest account because it's very simple to use and you only get one choice of ISA between each tax year. So that's from April to the other. You can't have more than one ISA per year. As a beginner, you don't have to worry too much about tax right now. Unless you're making more than £10,000 in capital gains, then it is beneficial if you open an ISA, but you don't have to worry about that just right now. So on the same portfolio screen, you can see that there is a tab called Investments. And if we scroll down, these are my current investments. So I have a small amount of shares in AMD, Alibaba, Amazon, so on and so forth as we scroll down. So it's a quick way of seeing what I've already invested in, how many shares I have. For example, Vanguard FTSE Japan, I have 4.16 shares and that has a current value of £99.82. It's very easy for me to see what I've invested in. So Trading 212 allows you to buy and invest in stocks and shares and also ETFs, and we're going to explain that now. So if we click the magnifying glass, we can see stocks and ETFs. So let's go through stocks first and explain what stocks really are. So when we click stocks, we can see companies such as Amazon, Apple, Tesla, Netflix, and you might have heard of these companies before. They're very large companies. And the way that investing works is that when you buy a share in Apple, so when you buy a stock in Apple, you get a very small amount of the company. And when the company gains profits and the company expands, the idea is that their future value will be worth more than their current value. And because you held a share today, in the future, that share will actually be worth a lot more, hopefully, than what you purchased it for. Therefore, you can make a profit in the future. And this is essentially how investing in stocks and shares actually works. So for example, if we click on Apple, we can see that we are given a graph, and this graph shows you the value of their shares throughout a function of time. So this starts on June the 2nd, 2013, and the value was $15.78. So click onto where we are now. The value is currently $154.53. So basically, if you bought a share back in 2013, today it will be worth around 10 times the amount. So when investors look for companies that they want to invest in, they look at all the financial reports to see if the company is generating profit. If a company is profitable, more than likely the company will grow and their stocks will also appreciate in price. However, there is a big risk in actually choosing individual stocks. So if I buy Apple and only buy Apple, there is no guarantee that the company will keep making profit. There is a small fear that the company may become bankrupt and the value of the stock will go to zero, meaning that all the money that you put into Apple, for example, becomes worthless. So depending on your appetite for risk, so how much risk you are willing to take, you can actually invest in individual stocks. I'm going to buy a piece of a share so that I can show you how easy it is on Trading 212. So here is a company that I want to invest in. For example, it is EasyJet. So we can see by the graph that EasyJet's price has gone up and down all over the place, and right now it's sitting at a very low. So sometimes when the stock price is very low, investors like to buy in that company that they believe in, hoping that the value will go up a lot. So right now, if EasyJet is a company that I feel like is going to go up in the future, the price right now is very cheap, meaning that it's basically a bargain and I'm getting it at a very discounted price. So the way the stock market works is if a lot of people are selling off their shares, the value of the shares actually drops as well. Conversely, if a lot of people are buying shares, the value goes up because of increased demand. So right now I'm going to put £1 into EasyJet. So all I do is press buy. I change the value to just £1 and we can see that this will give us around 0.28 shares. All we do is press review order and press send by order. And voila, we've placed our order. So if we go back into our portfolio and scroll down, we can see that we have bought 0.28 shares in EasyJet. It was literally as simple as that. But like I said, buying individual stocks and shares can be a risky game. So if we go back into the magnifying glass, we can see that there is also ETFs that can be purchased. So ETF stands for exchange traded funds. So for example, the Vanguard S&P 500 is the collection of the top 500 companies in the US, including big companies like Apple. These top 500 companies are regularly reviewed and those underperforming will get replaced by the better performing companies. This means that buying an ETF just like the Vanguard S&P 500 means that you have exposure to all these different companies, means that you're spreading your risk around 500 companies, and the S&P 500 represents the top 500 companies in the US, which is a global superpower having the highest GDP, so largest economy in the entire world, and most importantly, they have the US dollar, which is the world reserve currency, which is a very secure position to have in terms of currency. We can see from the graph of the MAX that the S&P 500 historically has always trended up. Even though there are always going to be some dips, it is always going up. And the reason why ETFs and stocks and shares on the long run for successful companies always go up is because of inflation. Inflation is a necessary evil because without inflation, no one will spend money. And if money doesn't go into the economy shrinks and there's not enough resources to keep growing and make things better. So I'm going to show you how easy it is to buy ETFs on Trading 212. So my favorite ETF is the S&P 500. All you have to do is press buy. You can buy £1 worth. So compared to other investment providers, even Vanguard themselves, Trading 212 allows you to invest with as little as £1, where other providers you would have to have bought the entire ETF worth around £64.25. So I want to buy £1 worth and I press review order and press send by order. And as soon as I press that, we have already bought the S&P 500 at £1. So if we scroll down, we can see the S&P 500. I have 0.015 shares, which is a very small amount. And currently the value is £1 because we literally just bought it. The value will always fluctuate minute by minute, but if we hold on to the long term like we've seen with the graph before, we are bound to make our money back. So that's the other important thing about investing, is that you should really be a long-term investor. In the short term, investments will always go down and they will always go a little bit up. It's very dangerous to keep buying and selling because you believe the value will change short term, but holding it long term means two main things. One is that it will grow as a function of time. As the economy gets stronger, the value of any good asset also increases. The other thing is compound interest. Now, compound interest is very difficult to understand and I'm not going to do it justice in this video, but essentially every year you get a certain amount back in interest, but over 20, 30, 40 years plus, what happens is a snowballing effect where the interest might be lower in years 1 to 10, but each year it just gets larger and larger and larger, and eventually the amount of interest that you have acquired on your investments becomes larger than the amount you put into your investment portfolio, meaning that even $1 million is not that difficult to actually achieve over the period of around 40 years, even through investing as little as a few £1,000s per year. Make sure to check out my other videos and I will see you in the next video.